A lot of buyers still make the same mistake when they shop for a car. They focus on the payment, the horsepower, and maybe the fuel economy, but they barely think about insurance until the quote shows up and ruins the whole deal. And in 2026, for a growing list of cars, that shock is getting worse. Some are getting hammered because repair costs have exploded, some because theft rates are high, some because drivers keep crashing them, and insurers are pricing that risk directly into the premium. The end result is the same. A car that looks affordable on paper suddenly becomes an ownership nightmare the moment you add the insurance bill. Today, we are counting down 15 cars with insane insurance rates in 2026, and by the time we get to number 6, you will see why one sporty sedan is quietly becoming impossible to justify for younger buyers. Let us get into it. Number 15, the Hyundai Elantra N. On paper, this car looks like one of the best performance bargains on the market. You get sharp styling, a real enthusiast chassis, a turbocharged 2-liter engine making over 270 horsepower, and a price tag that still feels reachable compared to German performance cars. But insurers do not care that it feels like a value. They care that it is quick, that younger drivers love it, and that it tends to be driven hard. That is the whole problem. Cars like the Elantra N live in the exact danger zone insurers hate most. Affordable enough for younger buyers, fast enough to encourage aggressive driving, and expensive enough to fix when something goes wrong. Add in today's sensor-packed bumpers, headlights, and driver assist systems, and even a moderate front-end hit can get ugly fast. This is the kind of car where the monthly insurance quote can be just as eye-opening as the monthly payment. Number 14, the Kia Stinger. The Stinger has always been a bit of a sleeper, but insurance companies are not sleeping on it. Especially if you are looking at the Turbo 6 versions, this thing combines real speed with luxury-grade repair costs. That is a brutal combo for premiums. The Stinger attracts drivers who want something different from a BMW or Audi, but from an insurer's perspective, the risk math is not all that different. You have a powerful rear-wheel drive or all-wheel drive sports sedan, expensive lighting, expensive bodywork, pricey wheels, and a buyer profile that often leans younger than the typical luxury crowd. Parts availability can also push costs higher on lower-volume performance cars. That means when a Stinger gets hit, the bill is not cheap, and insurers know it. The result is a car that looks like a hidden gem in the used market, right up until the insurance quote reminds you there is no such thing as a free lunch. Number 13, the Subaru WRX. Nobody should be surprised to see this one here. The WRX has been on insurance companies' radar for years, and in 2026 it is still one of the easiest ways to buy yourself a painful premium. Why? Because it checks every single risk box. It is turbocharged, all-wheel drive, relatively attainable, and very often modified. Insurers hate modified car culture because it usually means harder driving, more claims, and more uncertainty around repairs. Then you add in the WRX reputation. Fair or not, this is a car with a long history of being driven aggressively by people who bought it specifically because they wanted something fast and tossable in bad weather. That is fantastic if you are an enthusiast. It is terrible if you are the actuary pricing risk. Even a stock WRX can carry premiums that make you stop and rethink the entire ownership equation. And if you are under 30, it gets even uglier. Number 12, the Nissan Z. The Nissan Z is not just a sports car. It is exactly the type of sports car insurers love to punish. 2 doors, rear-wheel drive, nearly 400 horsepower in performance trim, and a buyer base that is not exactly shopping for calm, responsible commuting. This is the issue with modern sports cars in 2026. They are faster than ever, but they are also more expensive to repair than the old analog machines they replace. The Z has expensive lights, expensive wheels, expensive body panels, and a likelihood of spirited driving that insurers are absolutely pricing in. And because it is a niche car, you do not get the same repair volume efficiency you get with more common models. That can raise parts costs and repair times. So yes, the Nissan Z might look like one of the more straightforward performance buys out there, but once insurance enters the chat, it can start looking a lot less rational. Number 11, the Lexus IS-500. This one catches people off guard because it wears a Lexus badge, and Lexus usually means reliability, lower drama, and cheaper ownership than the Germans. But the IS-500 is not a normal Lexus. This is a rear-wheel drive compact luxury sedan with a naturally aspirated V8 making over 470 horsepower. That changes the insurance conversation immediately. From the insurer's point of view, this is not a safe little premium commuter. This is a high-horsepower performance sedan bought by people who specifically want a rare V8 sports sedan in a world full of turbo sixes. Replacement parts are not cheap, body repairs are not cheap, and performance tires, brakes, and wheels push claims costs upward. On top of that, the IS-500 is a little unusual in the market, and unusual cars often cost more to fix correctly. So even though ownership may be easier than a German rival in some areas, the insurance bill can still be wildly out of step with what buyers expect from a Lexus. Number 10. The Chevrolet Camaro SS. The Camaro SS has always had one problem when it comes to insurance. It is exactly what insurers imagine when they think of a high-risk muscle car. Big V8, rear-wheel drive, aggressive styling, and a long history of attracting drivers who enjoy using all the horsepower they paid for. And in 2026, the ownership math is even worse because modern muscle cars are not cheap to repair. The days of simple bumpers and cheap headlights are gone. A modern Camaro SS can rack up serious repair costs in even small accidents, especially once you start talking about front-end damage, wheel damage, sensors, or suspension components. Then there is the theft angle. Performance cars get targeted more often, and insurers price that risk too. The Camaro still delivers huge V8 smiles per dollar, but the insurance quote is often the cold shower that stops buyers from pretending this is some cheap, old-school horsepower bargain. Number 9. The Audi S5 Sportback. The Audi S5 Sportback is one of those cars that makes perfect sense until you insure it. It is fast, refined, practical, and genuinely beautiful. But insurance companies see something else. Turbocharged performance, luxury brand repair costs, expensive electronics, and a lot of components packed into a sleek body that is not cheap to put back together after a crash. This is where luxury performance cars become ownership cost traps. Buyers tell themselves they are being smart because the car is more mature than a Mustang or a Camaro. And in some ways, that is true. But when you need to replace Audi lighting, calibration-heavy driver assist hardware, premium wheels, painted body panels, and specialized trim pieces, the repair estimates go through the roof. The S5 is the kind of car where the premium is not just based on crash risk. It is based on how insanely expensive it is to make the car whole again once something bad happens. Number 8. The Ford Mustang GT. If the Camaro SS is on this list, the Mustang GT was always going to be here too. Same basic formula, same basic insurance nightmare. You have a powerful rear-wheel drive V8 coupe with broad appeal, strong aftermarket culture, a big history of crashes, and a driver profile that skews exactly where insurers get nervous. The Mustang also has something else working against it: volume. There are a lot of them out there, and insurers have years of claim data showing exactly what happens when people buy more power than their judgment can handle. Even if you are a perfectly responsible driver, your quote is being influenced by the people who are not. And as with the Camaro, repair complexity is not what it used to be. These cars now pack in more tech, more expensive bodywork, and more premium components than people realize. The Mustang GT still looks like one of the easiest ways to get into a V8 sports car, but once insurance is added, the total monthly cost can get absurd in a hurry. Number 7. The Mercedes-AMG CLA 45. This is where the list starts getting truly painful. The AMG CLA 45 looks like a compact four-door, but insurers treat it like the small missile it actually is. You are looking at a high-strung, turbocharged, all-wheel drive performance sedan with exotic-level specific output, luxury brand parts pricing, and a buyer who probably did not choose it because they wanted to drive slowly. The repair cost equation here is brutal. AMG-specific parts, premium wheels, huge brakes, expensive trim, sophisticated electronics, and a lot of highly integrated technology all push claims costs upward. This is not one of those cars where a fender bender stays small. And because it sits in that weird space between compact luxury car and serious performance machine, many buyers underestimate what it will cost to insure. The CLA 45 is a perfect example of a car that feels compact and attainable until the ownership spreadsheet starts telling the truth. Number 6. The BMW M340i. This is the sporty sedan the hook was warning you about. The BMW M340i is quietly becoming impossible to justify for younger buyers because the insurance side of the equation can get ridiculous. And the frustrating part is that the car is actually brilliant. You get real pace, real refinement, real daily usability, and a turbocharged inline-six that makes it feel special every time you put your foot down. But insurers are looking at a different spreadsheet. They see a near-M car in the hands of drivers who want the fastest non-M3 series they can get. They see luxury brand repair bills, expensive sensors, expensive headlights, expensive wheels, and costly bodywork. They see a car that is fast enough to attract risky behavior, but common enough to generate lots of claims data. That combination is deadly for premiums. For a lot of younger buyers, the M340i is no longer just expensive to buy. It is expensive to keep on the road every single month. Number 5. The Tesla Model 3 Performance. Tesla insurance stories are all over the place depending on where you live, but one thing is clear. The Model 3 Performance can carry shockingly high premiums for a car that many people still think of as a mainstream EV sedan. The reason is simple. It is not really a normal sedan in insurer terms. It is brutally quick, it has expensive battery-related repair considerations, and it is packed with cameras, sensors, and tech-heavy components that can make even modest collision repairs expensive. Then there is Tesla's repair ecosystem. Long repair times, specialized labor, and expensive parts all push claim severity upward. Insurers hate that. And because the performance model delivers supercar-style acceleration to people who may be stepping up from much slower cars, the risk profile gets even uglier. This is one of the clearest examples in the whole market of a car that feels cheap to fuel and exciting to drive, but then crushes you on the insurance side. Number 4. The Cadillac CT4V Blackwing. Enthusiasts love this car, and for good reason. It is one of the last great compact sports sedans with a real personality. But insurers do not care about that romance. They care that this is a low-volume, high-horsepower, rear-wheel drive performance sedan with expensive hardware and a buyer base that is very likely to explore the upper half of the tachometer on a regular basis. Low-volume performance cars often get crushed on insurance because repairs can be complicated, parts can be pricier, and claims data tends to show they are not being used like ordinary commuter sedans. The Blackwing adds premium brakes, premium tires, premium suspension components, and expensive body pieces to the mix. It is a brilliant driver's car, but it is exactly the kind of niche performance sedan that becomes an ownership cost ambush once you stop looking at horsepower and start looking at premiums. Number 3. The Toyota GR Corolla. This might be the most surprising value problem on the entire list, because the badge says Toyota, but the insurance math says something else entirely. The GR Corolla is a hot hatch with a turbocharged 3-cylinder, all-wheel drive, real performance credentials, and a buyer pool full of enthusiasts who are not exactly shopping for a calm, boring commuter. Insurers are not fooled by the Toyota badge here. They are pricing a specialized, relatively limited production performance hatch with expensive trim, aggressive use patterns, and a strong likelihood of modifications, track days, or very enthusiastic street driving. Add in the fact that the GR Corolla is still highly desirable and not exactly easy to replace cheaply, and you have the perfect recipe for painful insurance. This is one of those cars where buyers expect Corolla-like practicality in the ownership costs, then get blindsided by premiums that feel way more like a junior rally car tax. Number 2. The Honda Civic Type R. The Civic Type R might be wearing a Honda badge, but insurers price it like the serious performance car it is. And honestly, they have reasons. This thing has huge enthusiast appeal, strong resale, theft interest, a high likelihood of modifications, and a buyer base that does not buy it to putter around quietly in the slow lane. It also lives in a weird insurance gray zone where people assume it will be cheaper to own because it starts life as a Civic. That is not how insurers see it. They see specialized body panels, expensive seats, expensive wheels and tires, high-performance hardware, and claim histories shaped by drivers who know exactly what a Type R is built to do. So while the Civic Type R is still one of the best front-wheel drive performance cars ever made, it can also be one of the easiest ways to talk yourself into a Honda and accidentally sign up for a premium that feels closer to a junior exotic. Number 1. The Dodge Charger. This one was never going to lose. The Dodge Charger has become almost the perfect storm for insane insurance rates in 2026. It mixes serious horsepower, huge theft exposure, aggressive real-world driving behavior, easy visibility, and a claim history that insurers know all too well. And the crazy part is that even lower trims can get dragged upward by the broader reputation of the model. Once a vehicle family becomes associated with theft, street racing, reckless driving, and high-severity claims, the insurance damage spreads. Then you add in expensive parts, expensive wheels, expensive bumpers, and modern repair complexity, and the numbers get ugly fast. The Charger is the clearest example of a car that can look like a usable, family-size performance bargain on the listing page, only to become an ownership nightmare the moment the insurance quote hits your inbox. If you are not pricing insurance before you shop, this is the car most likely to teach you that lesson the hard way. So there you have it. 15 cars with insane insurance rates in 2026, and the pattern is pretty clear. Speed matters, theft matters, repair costs matter, driver behavior matters, and the cars that get punished the hardest are usually the ones that combine several of those risk factors at the same time. The smart move is simple. Before you get emotionally attached to any of these cars, get the insurance quote first. Because sometimes the real price of the car is not the sticker, it is the premium you are forced to carry every single month. If you found this helpful and you want more videos breaking down the hidden costs, smartest buys, and biggest ownership traps in the car market, go ahead and subscribe. I'll see you in the next one.